What exactly is a proprietorship, and is it the right business structure for you? If you're starting a business or already running one as a sole owner, understanding this fundamental business structure is essential. A proprietorship, also known as a sole proprietorship, is the simplest and most common form of business organization. It's a business owned and operated by one individual, with no legal distinction between the owner and the business. This means you and your business are considered the same legal entity. The appeal of proprietorships lies in their simplicity. Starting one requires minimal paperwork and formalities. You don't need to file incorporation documents with your state, and there are no formal operating requirements. This makes it an attractive option for new entrepreneurs, freelancers, and small business owners. Proprietorships offer several key advantages. You maintain complete control over all business decisions. The tax filing process is straightforward, as business income is simply reported on your personal tax return using Schedule C. There are no incorporation fees to pay, and you can operate with flexible management without worrying about board meetings or corporate governance. However, proprietorships come with significant drawbacks. The most serious is unlimited personal liability. As a sole proprietor, you're personally responsible for all business debts and legal obligations. This means your personal assets like your home, car, and savings could be at risk if your business faces financial troubles or lawsuits. Other disadvantages include limited funding options, as investors typically prefer incorporated businesses, and lack of business continuity. Your business generally dissolves upon your death or decision to stop operating. Additionally, proprietorships can be challenging to scale as they grow more complex. While formal state registration isn't typically required for proprietorships, you may need to meet other legal requirements. If you operate under a name other than your legal name, you'll need to register a doing business as, or DBA name, with your county or state. This is sometimes called a fictitious business name registration. Depending on your business type and location, you'll likely need local business licenses, professional licenses, or specific permits. Make sure your business complies with local zoning laws, especially if you're running a home-based operation. If you hire employees, you must obtain an employer identification number from the IRS and comply with all employment laws. Tax obligations for sole proprietors are relatively straightforward, but require careful attention. You report all business income and expenses on Schedule C of your personal tax return. The net profit or loss is then transferred to your Form 1040. Unlike employees, sole proprietors must pay self-employment taxes, which cover both the employer and employee portions of Social Security and Medicare taxes. Most proprietors need to make quarterly estimated tax payments to avoid penalties. If you sell taxable goods or services, you're responsible for collecting and remitting sales tax to your state. And if you have employees, you must handle payroll taxes, including withholding income taxes and paying employment taxes. Even though your business and personal finances are legally connected, it's crucial to maintain separate records. Mixing business and personal expenses can create accounting headaches and raise red flags with the IRS during an audit. As your business grows, you might consider transitioning to a different business structure. An LLC or corporation might be appropriate if you need liability protection for your personal assets, want to attract investors, seek more tax flexibility, or require a more credible professional image with clients and suppliers. Converting from a proprietorship to an LLC or corporation involves filing formation documents with your state and paying the required fees. While this adds some complexity and cost, the benefits of liability protection and potential tax advantages often outweigh these considerations for growing businesses. In summary, Proprietorships offer a simple, low-cost entry point into business ownership with complete control and straightforward taxation. However, they provide no liability protection and may limit your ability to raise capital or scale your business. Understanding these trade-offs is essential to making the right choice for your specific situation and long-term business goals.